Okay, so today we're diving into Opendoor, a real estate company whose stock has been making some, well, pretty surprising moves lately. And that's raised a ton of questions. Because to really get what's going on with Opendoor, you first have to understand the market it lives in. And right now, the US housing market is in a very, very strange place.
And that's the core puzzle, isn't it? The housing market is facing one of its toughest stretches in years. So why on earth is a company like Opendoor getting so much attention? To figure that out, we've got to peel back the layers and start with the big picture of what's happening. If you had to pick just one word to describe the US real estate market right now, it would be frozen, or maybe shrunken. And the main reason? Those sky-high interest rates. They've basically shrunk the pool of people who can afford a new mortgage, and at the same time, sellers don't want to give up the awesome low-rate mortgages they already have. It's just an incredibly tough environment for everybody involved.
Let's make this real for a second. Imagine you're buying a house. At a 3% interest rate, your monthly payment is, maybe a bit of a stretch, but it's manageable. But what happens when that rate doubles to 6%? Your payment doesn't just go up a little, it skyrockets. For a loan as big as a mortgage, that jump creates a massive financial weight that just pushes a huge number of buyers right out of the game. And you can really see the shockwaves from that. In a typical year, the US sees about 5 to 6 million homes change hands. Right now, we're looking at fewer than 4 million. The entire pie that real estate companies feed on has gotten so much smaller. And for a business like Opendoor, which is built entirely on the number of transactions, that is a huge, huge problem. So how exactly does this frozen market hurt Opendoor? Well, it's not just one single thing. The source material actually calls it a triple hardship. There are three separate, really powerful pressures all squeezing their business at the exact same time. Okay, let's break these down. First off, fewer homes are being sold, which means Opendoor is making way less money from its service fees. Pretty straightforward. Second, to protect themselves from getting stuck with a house, they have to make lower offers to sellers. And naturally, a lot of sellers are saying no thanks, which shrinks their deal flow even more. And finally, every single house they do manage to buy is like a ticking time bomb. It's an asset that could be losing value every single day they hold it. And when you add all three of those pressures together, the result has been absolutely devastating. This isn't just a little slump. We're talking about their revenue collapsing to nearly 1/10 of what it was at its peak. That single number just shows you the incredible depth of the crisis this company is in. But, and this is a really big but, this is where the whole story flips on its head. Let's look at the other side of the coin, because this crisis is also what's building the case for a potentially massive comeback. The very same forces that are pushing the company down could be the exact same ones that launch it into the stratosphere. So, here it is, the crucial point. The very thing causing all this pain, those high interest rates, is also the key that could unlock some absolutely staggering growth. If rates fall and the market thaws out, the potential upside is just enormous. We're not talking about a little recovery here. A tenfold jump in revenue could seriously be on the table. I mean, just think about it for a second. If falling rates bring all those buyers and sellers who've been sitting on the sidelines back into the market and transaction volume just gets back to normal, the entire game changes for Opendoor. That whole triple hardship thing starts to unwind, and the potential for explosive growth becomes very, very real. So this is really where Opendoor is today. It's standing at a huge crossroads. On one side, you've got the bear case, all those serious risks of a shrunken market, the pressure on their buying model, and the constant danger of their inventory losing value. But on the other side, you have a simple, incredibly powerful bull case that hinges on just one thing. If interest rates fall, the market and their revenue could just explode. So when you boil it all down, the company's fate is tied to a single factor that is completely out of its control: which way interest rates are headed. It makes Opendoor a really high-stakes bet on the future of the economy. So the final question for you is this. When you look at Opendoor right now, do you see an incredible opportunity, or do you see a dangerous trap?